Good evening, everybody. Thank you for your patience. We'll get going very shortly. Thank you. Okay, good evening, everybody. Welcome to this evening's ACY Securities webinar, live Forex market review. My name is Duncan Cooper. Before we get into it, please read through the disclaimer. Any questions to the question box or the chat box. If you're on our YouTube live stream, I can't see your chat. You're more than welcome to watch, or you can use the link that I've provided and you can just register and join us in the room. All right, so please read through the disclaimer. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor at ACY Securities, and I'm a full-time trader. I've had the opportunity of mentoring clients for more than 10 years, trading the Forex market for more than 15. And if you want to contact me, then my email is on screen, duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com. Go to the Market News tab, on our YouTube channel, ACY Securities Australia. And you can connect with me personally if you wish on Twitter and LinkedIn. As well, through the week, you can connect with me in our Telegram channel. If you want to get access, just contact Nathan Bray. His email is on screen at the bottom, and I'll put it in the chat in a moment. As well, if you want to get access to my chart layouts, templates, indicators for MT4, ones I'm using in the webinar tonight, then simply contact Nathan. He will set you up. So I'll put his details in the chat if you want to contact him. As well, if you've got any questions about opening an account, for example, he's also the guy to have a chat to. So his details in the chat as well. If you're an account holder, then you have the opportunity maybe to join us on Monday, the 5th of December, 8 p.m. Sydney time, where you can talk to me about your trading, any questions. We can talk about the charts, anything you want to talk about that's relating to you and your trading. Then that's what this webinar is all about. So contact Nathan if you want to come along and be involved in that. All right, first up, let's have a look at the news now. As nothing's really changing, the market's very, very driven by the US news. Fed Chair Powell did a speech this morning, and from what I can tell by the headlines, because I wasn't awake at the time, they're hinting that maybe they'll only have a 25 base point rise rather than 0.7, rather than a 75 base point rise. So that has clearly set the US dollar weaker. As well, we've got some more risk events coming out from the news perspective tonight. 11:30 p.m. the US core PCE price index. 1 o'clock in the morning, the US ISM manufacturing PMI data, and of course the job figures data at 11:30 p.m. on Friday evening. So it's not easy to be able to take a position because there's news coming. Understand what levels could be respected, and then in between the news items, so maybe after 1 o'clock in the morning, you've got till 11:30 p.m. tomorrow night to trade. All right, so we'll go through what patterns are forming potentially or could be forming, what levels are being respected or not, and then these levels should be good for maybe 1 or 2 days into next week. All right, so let's get into the charts. Obviously, we're into a new month. So with the federal governor, whatever he calls himself, is he the governor? Fed Chair Powell, I think his name is, get it right. Obviously came out, driven the market up on the pairs to the US dollar to the tops of the month. So let's have a quick look at the dollar index. Now the dollar index, I've been talking this week that it could be forming a double bottom. We haven't broken this low here. All right, that level is at 105.29. Now, were we forming a double bottom? Are we now forming a triple bottom? Some pairs to the US dollar have moved above their high points. Some haven't. Dollar index as a whole hasn't moved below the low it's been forming here. So is this going to hold? Just going to have to watch. It could hold. The euro dollar hasn't taken out its top. So if the euro dollar does take out its top, this will break the bottom here. So is this going to hold? The S&P 500 has moved up. It was potentially forming maybe a double top here. It's popped up. It's completely filled now of this imbalance that I've been discussing about. And it's a fraction short of this resistance over here, which is, I'm pretty sure from memory, is a monthly level. So now there's the monthly range, high to low. We're in between the 62.79% level. We're fractionally still below that resistance level. But this could be where the stock market tops out at the start of the month. I know the trend on the day chart's up, but your bigger picture trend is down. This is still in rally mode. Of course, if we break above the high here, we're not in rally mode anymore. The monthly trend turns up. So is the rally going to peak? Are we going to continue down? You have to watch what price does. Of course, we've got some risk news events coming out. So we may further go up or we could hold here. So just watch the positioning of, keep watching the structure and the positioning of the S&P 500, the dollar index. If the dollar index goes up and the S&P 500 goes down, then we may see pairs to the US dollar starting to move back down from yesterday's move up. All right, so let's have a look at the euro dollar. Let's go through the euro pairs first. All right, so in the Telegram I posted today, a possible head and shoulder pattern. I know it's in the face of the strength that we've been seeing, the weakness that we've been seeing on the US dollar, but some pairs have moved above their highs, the euro dollar hasn't, and on Monday we had a significant rejection up here. Now don't forget, we've only had 1 month up at the moment. We might not be able to have 2 months up. We may be topping out right at the top of last month for a movement back down the range this month. Or of course, we could break above the high of the month and have a second month up. But the monthly structure is still down. It's still in the downtrend. It's just a question of where does this corrective move finish at the moment. And the weekly trend is up though. It's overextended. It's moved above a couple of highs here, but it hasn't put in a significant higher bottom. Got a few minor ones here, but that's a significant low down here. We haven't had a significant correction on the weekly structure to put in a significant formation of a bottom. And what we are seeing on the day chart is a complete false break of this resistance area earlier in the week. Now on the 4-hour chart, last week's high here, we false broke on Monday, and we are up at the 79% fib level. We've already had an outside reversal candle on the 4-hour chart through early trading in London. So are we actually topping out then, forming a left shoulder, a head, a right shoulder to culminate the finish of this move up to maybe trade down? All right, it's difficult to take a position here with the news items coming out, but you might, after the news, have an opportunity, or you may just wish to take a trade and you don't care about the news. That's your own personal decision. So however you trade around the news, if you don't worry too much about the news, of course, we may be failing here at the left shoulder, the 79% level, last week's high. And you maybe want to take a position here, stop above the high. You could be taking a position here with a 100 pip stop above for the longer-term move down, if this is the starting pattern for the longer-term move down. Of course, we could move above here. So that is a risk at the moment, trading in the face of all this US dollar news coming out. So on the 50-minute chart, it looks to me like we've maybe having a what I call a 50-minute fib entry up here at the 79% level. Fraction short. Have we now dropped from where the right shoulder could form? Are we now running back up? Last rally on the 15 to now move further down. You'll have to make your own decision how you want to trade that or not. We have had a trend line break. Be up through there. So we are seeing weakness in this right shoulder area. In actual fact, you could say on the 15-minute chart here, there's a left shoulder. There's your head. Are we coming out here to put in a 15-minute head and shoulder, right shoulder there? All right, selling down as I'm talking. All right, so that's what's happening on the euro dollar. So I don't know what's going to happen, of course, from the news, but let's just get rid of these fibs at the moment. You know, over the next 24 hours, we could come higher. We could test the high resistance area here that we failed at. We could come up for a higher level test and still fail up at the 104.79 level, the 105, the 10500 level over the next 24 hours to 48 hours. You know, we could still go higher, but still fail. Or of course, we could break clearly above that level and start marching further up the chart. I mean, there is a higher bottom there, but we've had this massive rejection there. So it is difficult to work out what side of the market you want to be on. If you want to be on the buy side, it's not the best area to be a buyer at the moment because you're headlong into resistance. So you have to look for a better opportunity to be a buyer. Don't be buying into resistance. That's not the best productive way to open a trade at resistance. You'd need to see price maybe break above this resistance area and then price pull back to this resistance area and find support. We're not having that price action at the moment, so I'm just looking at the price action that we've got. We could be putting in a head and shoulder pattern there. Euro yen. Now to the, let's go to the day chart. We've had this lovely 79% retracement form, which was pretty much within the monthly range that was forming last month. There's the 79. So at the moment, we're moving below this weekly support level, trying to. But hopefully you can see that this is where you should have been selling. This is, you're getting to the profit phase of the move at the moment. So it's not where you want to be starting to sell. It's of course maybe a good area where you might want to be looking to at least take profits. Okay. Now, I don't know if we're having a long-term move down here because the monthly here, it's clearly in an uptrend. We're having a swing down now from the top. We could be having a bit more downtime, but this is clearly, it's still in an uptrend on the monthly unless we're failing from this area over here. So structure on the monthly, we are still up. The weekly structure is potentially putting in a lower top here for this movement down, but I'm very aware of what the monthly structure is. It's still up. All right, and that still might dominate the long term over the next 3 months or so, that we could well be moving higher into the new year. Don't forget, the Eurozone may be raising its interest rates. There's interest favors the euro to the yen in terms of the carry trade moving up. So at the moment, this is just corrective. Of course, the day chart trend is down. We're not seeing any uptrend forming on the day chart, but we could see a false break of 142.55 over the next couple of trading days. We could see a base of support start to form there in the 4-hour chart. And if we do, then there may be an opportunity to trade up to the upside. If you want to completely just focus to the downside at the moment, I'll be drawing a fib now from that 4-hour top. Keep dragging it down to the low, and then monitor a 79% retracement. This has been having countless 79% retracements. We moved down. We had a 79% retracement, a little bit beyond, but it was a 79% retracement failure to move just below the low. This was another slightly beyond the 79% level to move down. So it is getting very high rallies, but it is holding its downtrend. So I would be watching, you know, if you want to keep with the downtrend that we're seeing at the moment, look to sell a rally. Of course, we're not in that position at the moment to sell a rally. It's more at the bottom of the current move. All right. But there might be an opportunity to trade to the upside if we start to see a bit of support, a bit of structure forming on at 142.55 over the next couple of days. You know, there might be an opportunity to trade up, and that opportunity to trade up could be a significant low point. This is actually the low of the month. Okay. For last month. So we can often get a false break of the low of the month and go all the way back up to the high of the month from the previous month. Okay, so it's definitely a level to watch for failure. So it'll be interesting to see what happens down there. All right, let's have a look at the pound crosses. We'll go to the pound dollar. Now, I posted yesterday on Telegram the potential for the market to come up to the 121 level. It is got some legs at the moment. Drawing the fib from there. We were holding at the 79% level and the figure at 120,100. But we are coming up to test the highs, 4-hour highs that we formed last Friday and Monday. So can it hold or is it going high? All right. Yes, on the day chart, we are forming another higher bottom here. It's just a question of, this is the range I've been using. We are very high up in the range here. Is it just going to continue with the uptrends with the US dollar weakness and take out 21.55? Or are we going to start to see some breaks put on? Are we going to start to see this move back below the 120,100 level over the next 24 hours? Can you see a tight entry maybe to get short if that occurs? From a buying perspective, you know, your buying opportunity was down here from previous old resistance levels. Okay, there's a weekly resistance level here that was at 119.33. We actually came down to 119 last night, and that high there is at 119.01. So we actually got support from this old high. And you know, we went through the figure last night, and when I was talking about the figure last night, I was discussing where we're going to fail at the 120 level. So we actually did fail at the 120 level, went down to the 119 level, and then we traded up 200 pips. That's how volatile the market is at the moment. You know, as you were seeing this maybe starting to move down from 120, you wouldn't think that we could get back up to 121, but quite clearly we have. And it's looking a little bit positive above 121 at the moment, but that could well shift back below there over the trading day. When the news comes out later in the day, we may well see this move back below 121. 121 could become resistance. We spent some time yesterday above 120, you know, above and below for a while before breaking down to 119. And slightly saying you're saying that the pound's so overextended, it's scary to buy. It's very difficult to buy, but it is, you know, all the dips that have been happening where, you know, it looks like we're failing and topping out. It's, you know, trading down to 119. You know, we topped out earlier in the week at 121, down to 119. We're all the way back up to 121 or above at the moment. So we're not in the best area to be a buyer. But down here, of course, would have been a good area to be a buy if you were up in the middle of the night, but we can't go back in time. So I'm just monitoring 121. You know, if I do start to see a clear failure in that area, I will be watching that for a movement back down. But we could be moving above last month's high. We could be keeping moving up. And what I have shown you before on the pound is that this is the rate. Let me just move that up. This is the range for the year. Let me just double check. Or that was a high for the year this year. So that's the candle for this year at the moment. Let me just put that line back in. So we could be coming up to a 62% retracement of the range for the year. You know, we could be coming up all year to want to maybe test the 62% level. Or, you know, there's quite an imbalance here that still hasn't been filled from the 130 level. Maybe we're just heading all the way up here. All right, it would be nice if this could at least have a correction and put in a significant higher bottom on the weekly chart. However, it's not doing that for us. So we might be looking at this whole year range. We'll just have to wait and see if that's what the market's doing. But it would be nice if it could have at least a good correction, put in a higher bottom so you could look to maybe take a position lower down to trade up to those levels. Okay, but obviously the market's not giving us that. Edwin, you're saying, so you have shorted the pound at the figure with 100 pip stop, same as the euro dollar. All right, well, if the tops hold, you'll be good. If they don't, well, you won't. But, you know, the thing at the moment, market's very volatile. You just need to manage your risk. Make sure you're not risking too much. We have very good levels for maybe instigating a short. So, you know, all you can do is accept, do you like the levels, manage your risk, take the trades if you want to take the trades at these levels. All right, pound yen, we're putting in a further lower top here. So what we have done is form some form of double top up here. Now, this is going to be a true double top where we're failing at weekly over here and monthly resistance. So I'm just trying to fib across this double top area. Now, long-term double top price target is down here at 156.97. That's the height of the pattern from high to low, projected below. So, you know, if this double top comes to fruition, what is going to send it down to that level? Is it a further sell-off of the dollar yen, so yen getting stronger, or is it going to be simply the pound dollar failing where it is, and that has a heavy sell-off? But, you know, the pound yen is definitely leading that movement down when we're looking at the pound crosses. You know, we're comparing pound yen to pound dollar. It's putting in a lower top here. You know, up here was where you needed to look to instigate your sell. Or, you know, on the 4-hour chart, when we were coming up for this retest, yesterday we did come up and retest this area of 4-hour resistance here, which was from that whole range, I'm guessing very close to 62% retracement there. So we traded into resistance through there. That held and we've dropped down. So on the 4-hour structure at the moment, you can see the candle's having a bounce up. You know, look at the 4-hour, look to sell a rally. 79% level there. All right, overlaps with the 62% level of that range here. And there's also a 4-hour top there. So that 4-hour top, just to give you an area, it's at 66.68. So 66.68 up to 66.75 approximate. Might be more like 66.80. That area through there. You know, do we get a rally up there? It's a little, you know, it could form a little bit of a head and shoulder pattern. Head and shoulder generally form at the final top, but you could clearly see that there's a possible shoulder here, a head there. This could come up to want to form kind of a right shoulder or a lower top anyway in that area just there, around about the 166.78 level. All right, that's if it gets up there, but that would be a very good level to watch for failure. So you just have to monitor price. All right, let's go into Aussie pairs. Now, I did mention this. It's worth reviewing this. We can't trade it now. It's too late. I discussed this on Tuesday. That's the day chart top. Let's go back to the day chart. The day chart top there, I drew a fib from that top to down to the bottom. And said there's a 79% level there. I highlight the gap in here on my 15-minute chart and said maybe price wants to come in and just fill that gap that happened on Monday. So let's just drop it down, just squash it in a bit. It's always good to review, even though we can't go back in time and trade it right now. There was the gap the gap that hadn't got filled when I was talking on Tuesday. And I said, watch that level. That level held, and it's been moving down. Don't know whether anybody traded from up there, but it was a nice 79% retracement. Has been very range bound, the Aussie yen, but that did offer a nice trading level up there, and it worked very nicely. Whether or not it's going to continue to, move its way down through support, it's been very range bound. Last month's low is down here. Can we come down to Chinese last month's low? Can we come down and break this level of support here? So lots of support. Let's go back to the day chart. There's lots of support for this pair to try to navigate at the moment. Support here, there's more support there, there's that support low there. You can see it's been very consolidatory. Can it break to the downside from that 79% retracement that we've had this week? We'll just have to wait and see, but it's not in the position where you want to be buying. Where price is right now, sorry, selling. Selling where price is right now, you've got support here, you've got support there, you've got support there. You're in the support zone at the moment. If you did sell up there, then you should be at break even, hoping that price will want to move further down and through, okay? But it's not the point where you want to be selling. Now, 29.59, sorry, 92.59, I got my numbers the wrong way around. 92.59, this could be support for a move all the way back up to 94. We're in support zone here, down here. So if you do start to see some structure forming on the 4-hour chart here, or even simply some structure on the 15-minute chart that you like, that's telling you that you're getting support down here for reversal, but this could be definitely support down here at 92.59 for a move back up. As well, let's just do a further investigation of this, whilst we failed across this range, okay, 79% moving down, the 4-hour trend here is actually up, so maybe that structure is going to hold, and we're actually at a 79% retracement dropping back down. We could be moving back up that way. All right, maybe we can't even get down to 92.59. We've already found support there. All right, so depending on what time frame you're looking at there, there's some ambiguity. You're definitely in the day chart support zone at the moment. All right, so you either should have been getting your sell up here and you're at break even, fingers crossed for a move further down, or we're getting support here and we're actually going to move this way back up. All right, the Aussie. Now the Aussie, for most of the week until yesterday and into today, was starting to show you that it wanted to move down. So I don't know if, yesterday's price action and today's price action, of course, we moved up to another month up at the moment, whether this is the last of the move. We have a lower top just there on the monthly. So this is just a corrective at the moment. All right, of course, though, we could just keep moving up, moving up, moving up. But same on the week, there's your significant top. There's your significant bottom. There's a very minor bottom coming in here. We're challenging at the moment this weekly resistance level here at 82.26 today. We did get above it, and then we got smashed back below 68, and then we're fractionally above 68 at the moment. Is 68 going to call where the market wants to hold at? Did a video for our Telegram today saying 68, is it going to hold for a move down, or we're going to break above 68 and then become support for the market? And it's still a bit questionable. And I'm not sure where it can become support at the moment, but let's just draw a fib across the range that we've been having there. I've been having there all month of last month. So we did put in the lower top, then we put in the higher bottom. And, is this a complete false break of the high here? Is this just stops going off? What I can see, to the left, let's look left, see this imbalance. That day, the 13th of September, all right, that imbalance formed and we traded all the way down. Imbalances often get filled. So we've had an imbalance in here that has got filled today. We've also, so that the imbalance was here, all right. We've also traded up to an order block. For those of you who like to use order blocks and imbalances, all right. We had an order block form, then the imbalance occurred and we moved down. So we've moved back up to fill the imbalance. We've hit the bottom of the order block. We're also hitting the bottom of this weekly support low here, which is now resistance at 68.26. You know, we could top out here and see a long-term move down. At the moment, though, the day trend is up. So, but this isn't where you want to be buying, is it? You know, you needed to, if you wanted to be buying and you had the frame of mind that you thought this was going to go much higher into December, it was down here where we were trying to negotiate old resistance levels here that could be support. This weekly level here and the monthly level 66.81 and 66.71 ultimately offered some supports this week, even though it was below for a while. That's where some buying obviously occurred, and that's where the higher bottom came in. That was where you should have been looking to be buying if you thought this was more to trade to the upside. At the moment, this would be where you start to look to take profits, because if I draw a fib in on that uptrend at the moment, well, we've moved above the top, you know, we're at the 127 extension of this little minor uptrend that's reformed. So the 127 extension overlaps with all this order block, filling of the imbalance and the weekly resistance level. So there's plenty of reasons to think that that could be a good spot to maybe see the market top out. But well, we've obviously got some news items to contend with at the moment as well. So, you know, just be aware of where we're at. I don't think it's where you want to just go and buy. I think you'd really need to see a really convincing move above 168. Then a pull back to 168. And can that become support then to move higher? All right. Of course, we're at the 79% level up here as well. We're not near that at the moment, but we could, you know, obviously be targeting that area. But it's very, you know, very obvious imbalance here getting filled. Is that going to call where the market stops at? All right. You know, is this, by the end of the day, is this going to be a complete false break of these two day chart tops? You know, if we close below 67.81 by the end of the day, that should maybe be a very good signal that maybe we are rejecting false breaking, topping out. But it's not easy at the moment. You know, when the pair gives you a lower top in a 62% major level of the range, and you're finding it resistance, you know, you think this is going to the south side. But then, you know, the head of the Fed comes out and says, okay, we're only having 25 base point rise in probably in December, and then it just spins on its head. All right, so what's the area? We could fail in the area. All right, you know, we're at last month's high up here. I've shown in my webinar on highs and lows for the months or the weeks. I've shown you countless examples where price fails at the high of the month, breaks above the high of the month, completely fails and trades back down to the low of the month from the previous month. Last month's low is down here at 62.70 approximate level, 62.71. Okay, so if we see nice structure that shows failure here, you know, we could be back down to there by the end of the month. All right. We've covered the Aussie pairs, the euro-dollar pairs, the pound pairs. What's the pound doing? Let's just keep an eye on it. All right, it's just edging slightly higher. New Zealand yen. Got lots of lines on here, but ultimately we're at resistance up here. I'm going to get rid of some of these lines so it's a little bit clearer. Ultimately, I'm just going to draw it in. There's a weekly top here, and all these are weekly tops. There's a weekly top over there. This is your weekly resistance area. All right. Tried to get above that weekly top to try to test this monthly top. We couldn't. You know, is this putting in a lower top here? And this might come up a little bit higher. This could be putting in maybe a left shoulder head right shoulder. Yes, it's coming up from a higher bottom, but we could still get some form of head and shoulder pattern forming up here over the next few days. Or of course, we could blow through the top, but we're at resistance. We keep failing up here. It's going to need, this particular pair itself is going to need a complete shift in its mentality to say, okay, we're moving through. All right, hasn't been able to move through. So, this whole area of resistance has been forming since April. And Sliver asking me what Christmas might do to trading. When should we see the market slow down? Doesn't really slow down into the end of the week leading into Christmas. Do we expect Christmas rallies? I don't really focus on Christmas rallies. We often can get a stock market rally into Christmas, but I just look at price action. I don't have this set thing that we get a currency rally in December. I just see what price is doing and follow that in general terms. All right, I don't have a specific thing that I follow in December that always happens in December. Over some years, though, what we have had in early January, we have seen some significant volatility on the yen crosses to the downside over recent years. So, that's something to consider. So, but over the Christmas, once we get into the Christmas period between Christmas and New Year, things generally slow down. So, well, I mean, if the stock market has a very, very strong rally, expect, pairs to the US dollar to rally. That would, that's the normality at the moment of the way certainly the Aussie dollar runs and the New Zealand dollar runs. And, if we did get a very strong stock market rally, the US dollar is probably going to sell off and we're going to see a rally. But as I showed you before in the S&P 500, the monthly trend is still down. We could be putting in a top, a lower top to move down. Now that lower top might not form till, maybe January, who knows? So you're just gonna have to watch what price does. But I don't normally have this idea that, okay, through December, all currencies, to the US dollar rally, for example, or yen pairs rally, for example. All right, so New Zealand yen. So since April, so the best part of 8 months now, we are really struggling in this area. So unless something really shifts in the mentality of people, traders that trade the New Zealand yen, we could be topping out up here. We could be putting in, that's potentially a double top here. Let's trade down. We could be putting in a little head and shoulder pattern if we come up for another test of that level. So, not seeing anything I want to do at the moment. I would like to see the day chart turn to down because we still have a higher bottom, higher top, but I know we're at resistance there. So I'm not going to be buying into resistance with that day chart trend that I can see. Let's just drop down the 4 hour. The 4 hour structure here is still up too. So I think what I would be doing here is just watching this area up here. Up to the high there. I may just have lost maybe didn't want to draw, but this area here, let me try and draw it again. That whole area up there, that would be the area I'll be watching at the moment. If we can go higher up, are we going to fail there once more? Keeps failing there, so that's the level to watch for failure, back to the downside. New Zealand dollar is keeping its bullish structure at the moment. It's very frustrating because the monthly level I've been watching, this area here, 6204. I know by the end of the month, we're already up for another month. Okay, but only a day ago. So what we're on Thursday, Monday, what was it? Thursday, Monday, Tuesday. We closed below that level. Of course, yesterday we closed above it, but looking at the day chart here, so we had that day up yesterday. Yesterday we were trading below 6204. and we closed below 62.04 on these 2 days. And I was thinking that that high point there was going to form a lower top to trade down. But of course, the news from the early morning has driven it quite clearly further up. So I'm still got a fib drawn across this range. We're of course above the 79% level, and we could be coming up to test that level. Just going to put a level of resistance in. So of course, what's happened over the last 12 hours is when we were below 62.04, obviously lots of traders were getting short, thinking that this was topping out underneath 62.04. We had obviously maybe failed at the 79% level there of the range. And then the news comes out and all those shorts are covering at the moment. All right, now, is that a 1 day, 1.5 day cover? Or are we just simply going to move up now and challenge 64.68? Okay, it is a fraction short of this level up here. I'm not doing anything on this pair at the moment because this could well be coming up to test this high up here, and maybe it wants to move up and through. One of the things I did show you was this year's high, like I was just showing on the pound dollar. That's the range for the year at the moment. And 62% of that range is up at this high level. We're very close to that 64.68 top there. So we could be coming up at the moment to seek out this 62% retracement level. That could happen over the next week. So that is a level to watch for potential failure, because of course we've had a very negative year down. We're correcting within the candle of the year, but it doesn't mean to say that we can't have another year down next year, and the market's just positioning itself to where it wants to put in. Maybe early January, maybe we top out up here. We put in the high of the new year, and then we're down all year. So it is worth understanding where the range is for the current year that we're forming. All right, what's coming? I've got some in the chat. Tony is saying that head and shoulders pattern on the monthly also marries with the 79% fib from the drop from December 2014 to March 20. So you're talking about the monthly. Let me get rid of that monthly. So you say the head and shoulder pattern on the monthly also marries with the 79% fib. So are you talking about the potential of this area here? Or I'm just having a look at where you're getting all your information from. So you're saying marries up with a 79% fib from the drop from December 2014 to March 2020. All right, you're talking about the New Zealand yen. Okay, let's go back to the New Zealand yen in a moment. All right, I thought you were talking about the New Zealand dollar because I couldn't quite see what you're talking about. All right, so let's wrap up on the New Zealand dollar at the moment. Day chart trend is clearly still up at the moment following yesterday's items of news. And, we could be moving up to the 62% level up there. So if we just continue to keep going up, then let's start to watch this area of failure over the long term. But in the short term, the shorter term range is here. I'm not seeing anything to do to short this pair at the moment. It's not in the position where you want to be a buyer. You should be buying down here. So you're in the profit phase. All I'm doing at the moment is watching that level of resistance at 63.52 to see, does the market want to pause there and hold? This could just be stops going off all the way up here. we could start to see price action want to move itself back below the 79% level over the next few trading days. But trend is up here at the moment. Don't buck the trend if you can't see a good enough reason to sell. If you don't start to see price action on the 4-hour chart forming a downtrend, the opportunities may arise to trade to the upside. Just at the moment, you are in the profit phase, like I was just showing you on the Aussie dollar. Using the fib tool, you're getting into the 127 extension area. You know, I showed you on the Aussie dollar, we're at the 127 extension at weekly resistance, here at the 127 extension at daily resistance. So you're going to start to see profit taking there. It's not where you want to be buying. You want to, look for the next dip if you want to be a buyer on that pair at the moment. So that's where we're at. We're at the profit phase there on that move. Let's go back to the New Zealand yen so I can see what Tony was talking about on the monthly. All right, so the monthly, you're talking about that range. And you're saying that head and shoulder pattern. So I'm guessing you're kind of looking at this, maybe could be a left shoulder area here. So, when you look at all that information, you can see why it's holding here. And yes, this could be a significant area for a long-term failure. But you can see over the last months, it's got no direction here at the moment because the New Zealand dollar has been going down and the dollar yen's been going up. So this has been just moving up and down with, sometimes there's more weakness to the yen. Sometimes there's more weakness to the New Zealand dollar, or strength, vice versa. And it's just been moving within this very choppy range here at the moment. So we could be failing at this long-term area on the monthly chart. All right. But as you drop back to the day chart, these weekly tops that have all been forming here, that gives you clear resistance. And the day chart resistance area up here is a very good area to look for a short. It would just be nice, if we are in a significant area long term, so let's go back to the monthly chart. If we're in a significant failure area here, if you're looking at the monthly chart to look at the bigger patterns that will take a very long time to unfold, if we've got a very major pattern here to unfold, there's going to be plenty of time to get short. And what we want to see is from this area of major consolidation at the moment is, a clear break of trends where, a clear downtrend unfolds like this, that doesn't then lead to more consolidation and a move back up, that we clearly break out of this whole range that we've been forming since April over here, the significant area quite clearly, we need to see a significant break of this area first. If we can see a significant break of this area and we start to see nice price action, there'll be plenty of time to get short if that higher time frame head and shoulder pattern is going to form. Because at the moment, it's very choppy in here. But, you might be prepared to take a short up here with a 100 pip stop and just sit on it with the idea that, yes, that higher time frame pattern is going to hold and form, and you're just waiting for things to break down. But if that big pattern is going to form, we will get a clear break to the downside at some point and some nice price action that we can get on board. So it would be nice to see, because this has been very frustrating, that pair at the moment through the course of the last 8 months. All right, let's have a look at the dollar Canadian. Now, there's always the side of the coin at the moment. We're just having 1 month down really on the dollar index. But is that going to translate into much more corrective measures? We've been discussing left shoulder here on the bigger picture, head, right shoulder. Now, I don't know whether that is forming or not, because at the moment still, when we look at the trend of the monthly chart, we're still in an uptrend here, the monthly chart, higher bottom to a higher top. What we really need to see at the moment to maybe start to think about, yes, is that really occurring, is does the weekly chart change its trend, because the most significant lows there to that high there, that's an uptrend. We don't have a downtrend of significance forming yet. We've had a pullback pretty much close to the 79% level, got good support at weekly support here to start to move up. Are we moving up and going to take out this high? What I'd like to see, maybe to confirm this bigger pattern of head and shoulders, if that's going to form on the monthly, is a solid lower top to form on the weekly chart. We don't have that yet, but we could. This move up here could be wanting to form a lower top. We'll just have to wait and see what transpires over the next month. Are we having if the US dollar weakness prevails, will we see like a 62% failure up here at resistance, at the resistance area? This is day resistance, monthly resistance, weekly resistance. Are we going to come up here and fail? Put in a lower top. So for me to start to think, okay, yeah, we're getting this monthly head and shoulder pattern starting to confirm, I want to see this weekly chart show a lower top. We don't have that yet. We still actually have an upward structure here on the weekly chart, and on the day chart, we most definitely have an upward structure. We've got a higher bottom to a higher top. Yes, we've gotten rejected, but I did notice that we pull back just short of the 79% level. You drop it down to the 4-hour chart. This little 4-hour false break that we had earlier in the week for that big impulsive move up, where are we getting supports? In the same area. Doesn't that look suspiciously like a false break move back down? 134.13 is that level. So the 134 level, doesn't that look very suspicious? Like a false break. False broke that level twice, potentially now. Is that where we're putting in the next day chart higher bottom for the next move up? All right. Now, of course, if that happens, that maybe will get translated into the pairs to the US dollar for movement down. So this dollar Canadian is actually holding its trend quite nicely in the face of news coming out showing US dollar weakness. All right, so and that might be just the fundamental picture from Canada versus the US fundamental picture that it governs the US Canadian moving up. But it is definitely structurally holding its trend a lot nicer. This often is quite highly correlated to the Aussie dollar. Aussie dollar has moved up to a fresh new month up in its rally, whereas this hasn't moved down to a fresh month low. The low's down here. We're miles away from it when we compare what's happening on the Aussie dollar. So this is definitely holding its trend a lot better. All right. So this could be a good area to be a buyer for a move up for the next leg up there on the day chart. All right. That's your 4-hour look. So are we getting support at the 79% level now to move up? To come up to those resistance levels, first level to watch if we can move back above 135.02 is at 137.15. All right, let's have a look at gold. As we've been discussing, the weekly trend is up on gold. I know in the area that it's been sitting in hasn't been the greatest area to try to negotiate a trade. We've been sitting quite a narrow band of weekly support and resistance, but trend on the weekly is up here. The highest time frame trend is down, but we could have put in a considerable bottom there. Weekly trend is up. Level to watch at the moment, of course, we might not take out this high here and we could form a double top. This is a significant level of weekly resistance that you can see it's been well used back in time from over here, that low there. All right, so it is a level that could hold. We could see a double top here, or are we moving above and through? All right, so we've put in a bottom, try to put in a lower top. This is where it gets difficult, when it puts in the lower top and then puts in another higher bottom. All right, sometimes the market's really easy to trade, shows you high tops and bottoms, and the trend continues and continues, or shows a lower top, lower bottom, continues and continues, and life's just good. When it gets mixed and wants to keep chopping and changing its mind, it can get difficult. Frustrating, I know. All right, so there's your weekly support. There's your weekly resistance. You're just going to have to watch to see if we get a nice clean break above 1786 at the moment. Then we get a clear break above? Does that level become support at the moment? You know, dropping it down to the 4-hour chart. You know, we've gotten close to those. There's a couple of 4-hour highs here. We're not wanting to take out at the moment, and that's last month's high. You know, we could just fail up here and move down. So you can, you know, watch the structure here. Does it show a failure for a movement down? Not what you want to buy though, is it? You're at resistance. So, you know, some of these pairs at the moment, you can obviously say to yourself, well, I'm seeing an uptrend at the moment, but it's not where you want to just go click in and buy. What we might see over the next few trading sessions is, this isn't a 4-hour uptrend. You know, we might have a bit of a stop there. We could simply pull back to the 62% level now. All these 4-hour tops that were forming to try to move this down from a lower top on the day chart may offer the support level now for a move up. All right, so with all these pairs that have heavily moved up, like I'm showing you here, look to your 4-hour chart for a dip if you think, you know, the bias is now to trade to the upside. You know, you always want to be buying a dip in an uptrend, selling a rally in a downtrend. So look for that formation. You know, if we're going to move higher on any form of pullback, if we're going to move higher, these 4-hour tops should act as support in some form or fashion. All right, so that's the structure of gold at the moment. All right, any questions? Difficult at the moment with all these US dollar news items coming out. You just have to have your levels. You know, if you're more of a positional player, and I'm just reading my chat as I'm talking. If you're more of a positional player, maybe you could be trading with a 100 pip stop at a level, as long as you're getting in at the level, and it's a really good level, and to take a position. But if you're only trading with 20 pip stops when these news items are coming out, you're going to get burnt. So you either have to wait for the news items to finish, then hope that price behaves relatively nicely so it can give you an entry in whatever direction you want to move in. Now, Slav, you're talking about the S&P 500. You're saying there's a downward channel. On the weekly. Yep, I can see that. All right, yep. You know, we've come up to a monthly resistance. There is that definite channel there. It's definitely, you know, there's countless technical components there that the market could halt at. You know, on the daily chart, as I discussed, we've completed this imbalance here, or that resistance area is a monthly low that was. So there's countless things going on here that could call a top. So I might leave that on and we'll see how that looks next week. Might just refine that. There we go. Now, you could actually alter that and use the base of the channel here, and you get a slightly different angle, but let's just stay with that at the moment. So that would mean that price could come a little bit higher. So for example, let me just redraw that. You could draw it using these lows. And then, you know, the 79% level here kind of forms in with that top of that channel. So I actually like the other way. All right, we can monitor that next week. See how price is respecting that come Tuesday. Slightly saying, but include the top of the line back in time. You mean this one up here? Like so. All right. I mean, for me personally, I would go from that top to that top, because then that's your new resistance line. Because see from that top to that top, it got fractionally more aggressive to the downside. So then I would go to that top because the angle is getting more aggressive to the downside. That's just my personal preference. But however you draw it, we obviously get we know that it's coming up to the top of the range there in some form or fashion. Okay. And you know, could respect that point. You could draw it from those two highs. You could respect the slightly higher level. All right, you could draw the channel from these two lows, the most immediate two lows, and link it to that last high, and it would be a slightly higher channel. But we're all getting hopefully the idea that there's a definite channel there that the market's in. If we break above the channel, then that may, and we break above, you know, we've got the top of the channel there, we've got monthly resistance here. If we clearly break above that level, then, you know, we're starting maybe to see that there's a more convincing then argument that this may be a significant low for the longer term move up higher, maybe. All right. So we're at critical, you know, critical stage there in the S&P 500 to monitor for failure or a break higher. All right. All right. Any final conversations, questions? You know, at the moment, as I've said to you before, the way I'm trading at the moment, I only have one position open with risk at the moment. With all these news items coming out that, you know, keep changing the intraday trends, you don't want too many pairs open at the moment with risk. You don't want like 3 or 4 trades open with risk, because especially if you're trading in all the same direction, because then, you know, what they're all going to be wrong if the news goes against your position. So it is quite difficult at the moment to have multiple positions open, because the news keeps swinging the market back the opposite way. So, you know, there is the possible argument that, you know, maybe, let's just go back to the dollar index, you know, maybe from this whole major range here that we have actually topped out at the 79% level, and we're simply coming all the way down here. You know, we could, you know, we could, you know, maybe see that long term. Of course, you know, over the next month, this double top here that was, you know, that's the line in the sand, isn't it, for whether the US dollar is going to put a higher bottom in to move long-term higher. So hasn't been easy dealing with this correction at the moment, because, you know, it is only a correction, and we keep seeing pairs to the US dollar starting to want to move back down, and then the news comes out. All right. Mohammed, you asking, my question is, why don't you use many indicators? I do use MACD. Just to confirm the day chart on a lot of the time, just to show, have we topped out at a significant top or a bottom? And the reason why I don't use too many indicators and use them a lot of the time is indicators just lag. All right, so I don't like to use lagging indicators. I like to use price action. And Slavy is telling me that I nicely outlined the euro-yen behavior yesterday, and I think think you're telling me there that you did trade it. Yeah, last night, if you attended our webinar on the figure, I gave a very nice, hopefully, rendition of the euro yen. Let me just squash it in, of how it's been performing using the figure levels. And, you know, over the last week, we've been having a really nice failure up here at the 145 level. And we didn't quite get there, did we, yesterday, Slav? We didn't quite get up to the 145 level. So I don't know if you did trade up here, but, you know, would have been nice to hit 145 last night. And Mirren, you're asking me, what is my projection on the longer run for the US dollar, bearish or bullish, or do you see the rally is about to come to an end? Is it a good time to take longs on the major pairs, buy and hold? Well, I mean, I'm the same as anybody else. I don't have a crystal ball. I mean, all I'm doing at the moment in terms of fathering out whether or not the US dollar, you know, has actually topped, you know, is just looking at price. I mean, at the moment, when I go up to the highest time frames at the moment, this monthly trend here is still up. It's been a very long move, but the Fed came out last night and said we might only raise interest rates by 25 base points, but they're still saying that they're going to raise interest rates. And they also said that they will probably have a very prolonged period of high interest rates. All right, so that doesn't, to me, mean that that's altogether massively US dollar negative. All right. And, you know, for example, for the Aussie, we had some data come out yesterday that said that maybe inflation's peaked. So maybe our ability in Australia to keep cranking up the interest rates is actually going to come to an end. So that to me would mean that everything, just when we're talking, say, about the Aussie US dollar, favors the Aussie dollar to the downside, because you've still got the very high interest rates on the US side. And maybe we're coming to the end of the tightening process for the Aussie. So that to me doesn't mean, you know, US dollar weakness. It means US dollar strength when we're dealing with that pair, for example. So, you know, all I'm doing at the moment is seeing here that we're having just a correction. And as I just said, commentated before, this double top here that we've clearly moved above, as long as we hold above that level, for me, the US dollar strength can still continue next year. If we don't hold here, then we may well have seen the top. All right, so for me, this is a line in the sand. Now, yes, the weekly trend potentially is down at the moment, but we're coming into a support area here on the weekly chart. There's a couple of tops here. I might just color it in with the box. There's a low here. There's a couple of tops. So let's just cover that whole area. You know, we're into some area of support here. All right. So all this support, when we pull back here, when we pull back through this area, all came in ahead of this double top area. Came in ahead of this double top area. So all the support that came in, the market didn't want to come. Once we actually came through with some significance, we did get a bit of support there, but that was a minor area low formed for that push up. Then we put in a higher bottom quite clearly away from those tops. So we can't move below that bottom there on the weekly chart. So that colored area that I've drawn in, if we hold there, to me, then there's every chance that we're putting in the bottom there for the next long-term move up. All right. If we move below that level, then there's much more of an argument for a much more deeper correction. All right. So, you know, just have to look at the clear areas of support that potentially should hold and hold the pullback. And if they don't, then there's, of course, then a much stronger argument for maybe wanting to look to trade the pairs to the US dollar to the upside as we head into next year. All right, hopefully that helped you, Harash. So you're saying, yeah, but earlier there was a V-shaped recovery expected between Feb and May with interest rates topping out. Well, you know, the Fed can say that if you're talking about the Fed, but they can change the tune every month. You know, it's like the governor from the RBA of Australia said that he wouldn't be putting up interest rates till 2024, and he starts raising them in 2022. So, you know, they can change their conversation from month to month. So, you know, I listen to what they're saying. However, you know, I also look at where the trend is, where support, significant levels of support have been formed through the year. And this was a significant level of support that got formed on the dollar index, which was above these tops. So if this level doesn't get taken out, then of course, this could move up. Now, while I'm talking, I didn't cover the dollar yen tonight. So while I'm talking, let's just cover this. And all right, so let's just have a look at the dollar yen. I didn't cover this one. We have broken below the double bottom here that was potentially forming this week. Now, again, you know, this is the range of consideration at the moment, this weekly low to the weekly top. Until we break below this significant low, you know, and we stay within the range that we've been forming here, we could be pulling back to the 79% level at the moment and holding and turning around. Now, we have put in a minor lower top here on the weekly, clearly breaking below the day support level here at the moment. Now, we could, you know, we could deal with a false break here, you know, for the sellers to be remaining in control at the moment on the dollar yen to the 4-hour. The broken level that we've broken below, 137.68, and last month's low at 137.49, now needs to hold as resistance. If we start to, the market wants to hold back above that level, what we might see here form and it'd be, you know, this could form over the course of the next week. You know, are we dealing with a false break of that level? You know, first of all, we need to see, does the rally come back up and hold? If it holds here, we're further moving down. However, what we could see is a false break of that level. And over the course of the next week or two, we might see this formation start to form. Might see an inverse head and shoulder pattern form there. But we're getting a lot of support from across from this daily low. So of course, a lot of stops have gone off down through there. So all those, it's the opposite really to what's been happening on the New Zealand dollar and the Aussie dollar. Lots of people were buying through at this area. The news comes out, they've decided they're wrong, they have to sell, the stops go off. They may be reversing their positions as well. So on a rally back up at the moment, for the dollar yen to keep moving down, that level now needs to hold as resistance. If it doesn't and we move back above, we may well see a reversal back up, okay? So 137.66 that we were looking at supports earlier in the week now needs to be resistance for this continued decline that we're seeing on the dollar yen. All right, and if we do break 130.40, you know, breaking 130.40 for me, that would be good confirmation that maybe the dollar index has topped, because the big driving force of the US dollar moving up, the dollar index, has been the US dollar yen. This very, very large, let's go to the monthly chart, this very, very large move up that we've had. All right. So that's kind of a minor monthly low there on my charts, which was, you know, that weekly top there became support to move higher. So that's a critical area that we need to be watching as the month unfolds. Does this area get negated? If that area gets negated, we could be moving all the way back from where we came from, and the US dollar has topped out. So, you know, over the next month or two, we may start to see that hand of has the US dollar topped out? Or is this just something going to be correcting here for another movement back up? You know, it might come to the 79% level and hold to move up. I can see that there's some daily support here in that area. That was the start of the move up. This could be where the buyers come in. So at the moment, I'm just watching 137.66. Is that a false break? Do we rally back up to that level? Does it become a resistance for a further move down over the coming week? All right, so that's the position of the dollar yen at the moment. All right, I think that was the only one I missed. So that's covered everything. Just run over a little bit, but that's fine. Let me just go through my chart to make sure I haven't missed anything. Mohammed is saying, sorry, the orange gap area indicates uptrend or downtrend. I don't know what pair you're talking about there, but if you want to tell me, I will go back to it. I'll just give you a minute. So if you want to put something in the chat, just let me know. While you're doing that, I'll just go to the webinar page and tell you what's coming up next week. We've got more analysis next Tuesday, so we will be beyond the job figures and tonight's news. So we might have a bit more of a steady flow of price action next week. I'm going to do a review of last month's price action and the patterns that unfolded. All right, so that's Wednesday, and more live market analysis on Thursdays. That's what's coming up. So if you want to join me, just register your interest at the webpage. And Mohammed, I'm still waiting to see whether you want to give me an update to your question. I'll just give you 30 seconds to see if anything can come in. And while I'm waiting, we'll just have a quick click through the charts, see what is happening on the 15 minutes. Dollar yen may be putting in a bit of support there on that 4-hour chart, 79% level. And Aussie dollar is putting in a little bit of 15-minute base of support here at 68 at the moment. All right, Mohammed, you say it was an old slide. I'm not sure which one it was. So if I don't know which chart we're looking at, I can't answer your question. So I apologize for that. All right, everybody. If it comes to mind, Mohammed, and you want to send me an email and ask me the question, just shoot me an email to duncan.cooper@acy.com. All right, sorry about that. All right, everybody, have a great weekend. Thanks very much for being with me this week. Wherever you are, have a good weekend and look forward to seeing you next time. Thanks, everybody.